Ever stare at the charts for hours and nothing, just nothing looks good? And then after a while, you trade something just because it's something and because there is nothing that really looks good in the market? Yeah, I've been there. And that's the fastest way to bleed an account. Now, the truth is, you're not actually missing any kind of setup. The truth is, you need a structured plan, a structured framework to really identify what kind of opportunity is lying in the market. So for example, the way that I trade requires a few things. So the first thing that I would generally need to see in the market is some strong activation. So right here, I'm looking at EUR/USD. I see a strong push towards the upside, and we can see there is clearly liquidity here. Power is coming in, right? So once I have that, all I need to do is just simply mark out a support equals resistance area. I would drop down to the lower time frame just to see the detail of this pullback. And that's the second thing I would do. Right? I would, really identify and look at the pullback that's coming into my level. So for example, here we see things sort of slowing down here, and I'm pretty much just waiting for the lower lows and lower highs of this miniature downtrend to sort of die out and turn around, and that's where I would generally get in, right? So if we really track forward here, we can see things starts to turn around right around there, right around here. Once I see that, then it's pretty much as simple as looking for an entry. I would, get in on the pullback into this area, stops below the zone I'm looking at, and then taking this trade to the recent high. And if we really play this forward, it will look something like this. We get a little bit of a test. Price is pushing towards the upper side, retesting that zone one more time. In this case, it's taking a while, but retesting that zone, and then there we go. We really got a takeoff, and very soon here we get to see price approaching, and then boom, there we go, take profit. So it's almost like a three-step process for me, right? For me to identify a setup in the market, the first prerequisite is looking for activation in the market, right? Looking for a zone to trade at on the retest, and then going down to the lower time frame and trying to time the turn, right? But some of you guys may be thinking, hold on, the way that you're trading, requires a trend because here it looks like we are in a trending market. Now that's the thing about what we do at UF trading. Our goal is not really about just focusing on trending market. Using the same exact approach, you can use it in all different types of market state. For example, EUR/USD right here, you can even use it in a channeling market, right? So for example, if you spot a channel in the market that looks something like this, if we really mark out the highs, connect the highs like so, and if we connect the lows like so, we have a very good looking channel, right? And clearly I'm going counter trend here because it looks like we're in a downtrend. However, using the technique that I just shown you, right, it's still possible to trade it in all different types of market state. So if we drop down to the lower time frame and we really look for things to turn around in terms of the downtrend, we can clearly see we touch the low of the channel right here, and if we really step forward here, we can see that the trend starts to turn around, and we get that turn right around here, right? If I really just show you exactly what I'm looking at here, we touch the top of the channel, we touch the bottom of the channel, right? Price tried to push higher, doesn't really go anywhere, but we came back down for a final retest into this zone right here, right? This is what we call a trap area. We retested that area, and then this move towards the downside slowly fizzled out, and we started to see this short-term downtrend right around here starting to turn around, right? At this key trap area after testing this bottom of the channel. When you see something like that, that generally tells me, all right, it's a very clear sign that, we are turning around, and there's a very high probability that we're gonna travel to, the top end of this channel. And if I really play this forward, we can see, things, just holds above the entry, and we get a very quick takeoff. Not fastest takeoff, but we're not in drawdown. That's the most important thing when it comes to trading, right? And then close to profit now, close to target. We're still hovering around the top end of the channel. But looking at this, there is a high probability that we are able to get that. We get a second pullback into this SNR right here. Price is still holding, and then boom, there we go, hit profit, right? So if you recall the first example I was looking at, I was looking for activation in the market, right? So if we go back to the 15-minute right here, we see some sort of activation, but this kind of activation is, sort of different. It's not exactly the same, But what I can tell you is, as price comes down into this low end of the channel here, we see a strong aggressive rejection back up, right, from the bottom of the channel. And what else do we see? We see that, you know, we could potentially use this SNR on the far left to justify that all of this move down was just a faker towards the downside, trapping any sellers, you know, who's trying to sell here. And when they're selling and then things turning around on them, they're on the back foot. Once they're on the back foot, when we get a retest, it's very, very easy to see a very quick, you know, push towards the upper side in this case. If you trade a strategy where it's A plus B equals C, you have a very hard time in the market because you're trying to spot specific pattern, and the market evolves every single day, right? So for you to get an A plus B equals C system and apply it every single day, that's gonna be close to impossible. The closest thing to doing something as consistent as that is having a strategy where it's robust enough, where you can use it in different market conditions. So I'm gonna show you one more example. Right here, I have the pound Swiss, and instead of a channeling market here, we're looking at a ranging market, okay? Now this example is much more simpler. If we really mark out the highs and the lows of the channel, it will look something like this. This will mark out the highs and encompassing of this high, this high, this high, and the lows would be around areas like this, right? This low, and this low, right? So on this day, we have a push towards the downside, very, very aggressive push. I see that as an activation in the market, right? There is momentum, there is activity. However, not all activity and momentum can be trusted, but there is always something to do when you see activation in the market. So in this case, we have an activation towards the downside, and then very quickly, we see the entire move being undone by two strong green candles, strong buyers. When I see something like that, and when it's, you know, happening at the bottom of the range, this tells me there is a very high probability where, you know, if we do get a pullback, test into this zone, we could very easily see a move towards the upside, right? So I view this activation towards the downside as a potential, you know, faker, a probe, you know, to the bottom of the range, right? So if we look at this and we drop down to the 1 minute time frame, and let's look at the pullback, right? To see if we get a pullback into the bottom part of the range. So we see price hovering around sideways, not that interested. I want to see price coming close into this green level right here, which marks the bottom of the range on the higher time frame. If I get a pullback, all right, we do see a pullback towards the downside, very aggressive sellers towards the downside. And now what I want to see is to see the short-term move towards the downside turning around, which then marks as a higher low for this move towards the downside, right? So we see a push towards the upside, right? And I want to see a structural break where we can clear this last push down. So if I really, you know, show you exactly what I'm talking about here, we have a move towards the downside like that, like that, like that, pull back, right? So far, you know, all of this is showing that we are in a downtrend, right? And we get a pullback into that area and we're trying to sell again. If this sell fails after testing this bottom of the range on the higher time frame, this is the extra confirmation to say that the bottom of the range is holding, and there's a very high possibility that this is gonna rocket towards the upside from the bottom of the range, right? So when you see something like that, it's gonna be as simple as, you know, getting in on a retest into that area and then just putting your stops below the bottom of the range. And then, you know, what I would generally do is go back to the my higher time frame right here, and then trying to take it up to the top end of this range right there. Okay, so a target of around 2R. And if we play this forward, we can see we get a retest into that area, we would be filled, and then price immediately see a takeoff, a launch, right? Things are still going sideways, but, you know, we see a strong push towards the market, making higher highs, higher lows now, right? Let's see if we get a continuation towards the upper side, stalling sideways a little bit, you know, getting a pullback, reacting off this zone here. As you can see, all the entries that I have shown you, they all take off very quickly and they don't go into drawdown. So that's what's really important as well when it comes to, you know, having a robust strategy, that you can trust your entry and trust your strategy. So we're still hovering around here and not really going anywhere. Hopefully by this time, you know, you would be moving your stops in, protecting your risk a little bit because you have nailed the entry. And, you know, we're starting to see price picking up again, still going a bit sideways, and then getting close to the top end of the range, nearly there now. Boom, take profit, okay? Just like that, it would be a 2 our trade. So again, conventionally, the easiest trade would be the first trade I've shown you, right? An activation in the trend, looking for a pullback into the support equals resistance area, and then just looking for a buy. However, activation can be used in multiple different ways, and this is what's so important about having a strong and robust strategy. Now, I can't get into all the details and all the different variations of trading when there's activation in the market, because if I do that, we'll be sitting here for 12 hours long. And everything you have saw just now is just the tip of the iceberg. I've spent the last couple of months digging through everything I know, everything I've learned, everything I've studied, and put it into a simple step-by-step program called the Pip to Profit program. This program is specifically designed for anyone who has a 9-to-5 job and for those who are getting into serious trading for a living. It's a very, very simple program. If you have liked anything you saw on the UF Trading channel, this is a program that you will love because it provides all the stepping stones, all the steps that you need to become profitable in merely months. So the Pip to Profit program is in its early bird phases. If you haven't picked it up yet, check out the details below and I'll see you in the program. Cheers. Bye for now.